Today, Bitcoin saw a breakout above its consolidation zone. We actually hit the highest prices today since the end of January. So Bitcoin continuing to make progress on this trend. We have seen some rejection off of that new high to retest the breakout zone. If Bitcoin is able to maintain previous resistance as new support and confirm this breakout, this may be setting us up for a major run for the third measured move since 74,000. This is the pattern that we've been tracking on this channel for the past several weeks. And each one of these measured move extrapolations has been pinpoint accurate, and the next setup takes us up to as high as 115,000, believe it or not. So let's dive in and discuss in today's video. If you are an active trader in this market, then you know that every time you buy or sell, you are charged with fees on exchanges. And over time, these fees do accumulate to be quite significant. Depending on how much you trade, it could be thousands or tens of thousands of dollars per year that you're spending on fees. Now imagine if 1 in 10 trades that you made were free, no fees. Over time, that would add up to quite a lot if you're an active trader, and that is possible. This deal does exist. Using that link below, code Sven, if you sign up for Blowfin using code Sven, you get 10% cash back on all your fees. Basically, 1 in 10 trades is a free trade. Sign up for Blowfin. It only takes a couple minutes to get signed up. It's easy. Now let's get back into the video. What is up, guys? Welcome back to the channel. My name is Kevin Svenson, and today we have some interesting price action for Bitcoin. Altcoins not necessarily doing as well. Bitcoin's still stealing the show. Now, looking at Bitcoin on the 4-hour chart, we can see that we have had the break of our recent formation. And this downward sloping resistance line right here, each one of these was marked, each breakout was also marked with the 4-hour RSI breakout. Those have always lined up on each major move up. That 4-hour RSI breakout was critical each and every time. Even when you didn't have much of a move up, that move up right there at the end of April from 93,000 up to 98,000, that came right alongside that RSI breakout. So this is the next major signal, and we actually got the signal today. So if you're looking at the 4-hour chart, that RSI right there, we've broken out of that. We have rejected, of course, that new high, but we are potentially flipping it into new support, right? And that would be ultimately very bullish and what I would consider constructive price action, actually building upon previous structure. So as long as Bitcoin can just settle up here and continue, I would say, we're looking good. We may actually follow this third measured move. And for those that don't know, the measured move is essentially when you just take your steepest part of the flagpole, the impulse up, and then you place it on the next breakout zone, sort of a textbook way of finding a target. So far, it's been pinpoint accurate. That first measured move, the steepest part of the flagpole, placed on the breakout zone, led us right up to that high, right around the 97,000. The second measured move, when you measure the steepest part of this flagpole, you place it on the breakout zone, that led us up literally to the wick high of this recent move, a pinpoint accurate target. And if you take the steepest part of this flagpole, the impulse up, and you put it on today's breakout zone, that lands you at about 115,000. And this is not some sort of crazy idea. I'm just taking the same exact approach to finding the next target as I did for all of these moves. And, we may get this, we may not. As of right now, Bitcoin, in my opinion, looks really, really good. Even with the little rejection we had earlier, we're just retesting previous resistance as new support here. So I think it's still really likely for this to play out. But the main thing is if the stock market allows it. The S&P has been on an epic rebound. I mean, we're really, really close to a new all-time high for the S&P. Imagine if you told people that at the bottom of this market when everyone was calling for a recession or 2008 style crash. Imagine if you said that in a month we'd be back at the all-time high. Nobody would have believed you, but here we are. This is an extremely volatile market, and anything is possible in these conditions. And so my point is, as long as the S&P and the stock market in general sort of allow Bitcoin to remain bullish, then Bitcoin will probably follow that next measured move target to 115,000. If the S&P finds some sort of lower high or resistance, well, then it may not be so easy to get to 115,000. And so really, I'm going to be gauging, the likelihood of this next major leg. The likelihood I'm going to be gauging by looking at the stock market, because speculators use the stock market as a confidence gauge. What tends to happen is that when Bitcoin breaks out, Bitcoin dominance begins to come back up. And that is what you can see on this daily chart. Dominance is beginning to tick back up as Bitcoin is preparing for a continuation to the upside. Bitcoin can become a black hole of liquidity, just sucking in all the money as it's performing really well. Once Bitcoin settles up at a higher level and begins to calm down, that's when liquidity begins to shift towards the altcoins. But as long as Bitcoin is just pushing higher and higher, well, then it might be difficult to get that switch. But in terms of Bitcoin dominance, in the Patreon Discord, in the voice chat, our morning voice chats, to confirm an actual true reversal for Bitcoin dominance, to be more certain that there's an alt season taking place, which right now it's still questionable. But to be certain, we need to have lower highs and lower lows. In the last zone where Bitcoin dominance had a trendline breakdown, you can see we pulled back, rallied up, rejected, and then found a higher low. So that higher low, was pretty much the signal that dominance was not done just yet. And so we have the same breakdown situation. And what we need to see to confirm a downtrend is lower highs and lower lows. That is what the definition of a trend is. We have a breakdown, which could potentially be a higher low. Now we are in a position to put in a lower high. So that is really all we need to see is lower highs, lower lows, and then we can confirm that alts are beginning to take up more dominance in the market. As of right now, it's not clear enough to say what's happening exactly. Dominance is lower than it was before, but we're sort of just stuck now in this range. So we'll see if we get the breakdown later on. If we're looking at this comparison with others, the altcoin index, the lower cap coins on the bottom, and then Bitcoin on the top. If we mark a vertical line on where Bitcoin began to go flat in 2021, it was right there around 58,000. After we hit 58,000, it pretty much went flat. And from that point, you can see altcoins had a huge move up. The others altcoin index went from 145 billion up to 421 billion. It's quite a lot for the index. It's about a 200% move for the index itself, while Bitcoin basically just went flat. And now when you're looking at the chart, you can see a lot of the altcoins are still finding trouble gaining momentum. And really that's because Bitcoin is performing well. So until Bitcoin really starts to slow down at a higher level, it may be difficult to get some sort of epic alt season, or we just need Jerome Powell to soften up a little bit. Ethereum right now is showing, a lot of volatility. It pulled all the way back to 2,300. It was the top gainer last week. There was a point in the last week where Ethereum was up 50% and Bitcoin was up 10%. And so we're seeing more volatility for Ethereum. From May 7th, Ethereum is up 35%. And for Bitcoin, from May 7th, Bitcoin is up, 9%. So that's a pretty big difference, 35% versus 10%. That's Ethereum's made some substantial moves. And yes, there's going to be increased volatility. But if we're holding these levels here, to me, it looks pretty good. Right now, just washing out late longs as usual. Market goes up, a bunch of people try to go long, FOMOing in, the market washes them out, stops them out, and then continues, right? Generating liquidity for bigger players to accumulate. So this is what we see constantly in the crypto market is, liquidity sweeps. You break above the highs, you sweep to new lows, and then you get continuation. This is just how they churn the market, and it happens all the time, even in lower time frames. You can see slightly higher high, sweep the highs, to a slightly lower low, sweep the lows, and then bounce. This is the standard playbook, largely driven by algos and bots that have, learned how you trade and know where you put your stop losses, and that's what they target. That's how these bots operate, is they learn over time and really just take advantage of the average trader. So it's definitely important to remember if you're trading in the shorter term that the market is always trying to set itself up against you. It sort of sweep you out above highs and lows. So one thing you can do is that instead of just going long randomly, put your entry where you would put your stop loss instead. Instead of just going long, just put your entry where you would put your stop and wait. You'd be surprised at how often the price will come there. The price will come test where your stop loss would have been. So that is a little tip for you guys there. And remember, guys, you can save thousands of dollars or tens of thousands of dollars a year, depending on what kind of trader you are, by signing up to an exchange that offers cash back. And this is exclusive for my community. Using code SVEN, you get 10% cash back on all of your trading fees by signing up to Blowfin Exchange. It's really easy and simple to sign up. It just takes a couple minutes and you can begin getting money back right now today. So definitely click that link below and I'll see you guys in the next video.